Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So you should be seeing the Forex Factory calendar right now. One thing to keep in mind with this is whenever you are looking at the Forex Factory, you really want to always make sure you have the right dates on here. It seems that a lot of the dates that we're showing in the past, like on the weekends, you always want to move forward to the next week. You can actually even go even forward more to the next week as well. So let's go back to this week. So the important thing to understand is that starting tomorrow, okay, we have 2-day Fed economic projections press conference, the FOMC, which just stands for the Federal Open Market Committee, and the ensuing comments from Chairman Jerome Powell, who is a good guy. And the great thing about Jerome Powell, unlike his predecessors, and to a much larger degree, Alan Greenspan, he speaks in normal terms, not Fed speak. If you ever want any just sort of fun satirical stuff, go to YouTube and type in Alan Greenspan Fed speak. You'll see some of his press conferences where nobody but the even highest level economists can understand what the hell he was talking about. So it's kind of comical. But in any case, that's the next 2 days. So obviously that's going to add some potential volatility to, let's just face all currencies globally, right? Because any of them could be attached even in a second or a tertiary form to a pair that is ringed in with the US dollar in some other form, right? So it could sort of ripple or reverberate through the currencies. Definitely want to keep in mind that. With most of these press conferences, a lot of the questions are fairly well known. The Fed, for the lack of maybe their own fault, has become quite accommodative, as you guys may know, to global markets, dropping cash, if you will, in the form of quantitative easing down on the primary deal accounts globally, along with a lot of the other big 4 central banks around the world. So the very accommodative and/or the stimulus packages that most countries have passed in some form. We're in our third iteration of that here in the U.S., with stimulus number 3 being distributed. The question really is does all that cash make its way into investment accounts, right? Does it make it into retail? Does it go to vacations? I think the thing that surprised me a lot, albeit, what the hell do I know? I'm not a retail analyst. It was never my area of expertise when I was an analyst. But I mean, travel and leisure has just been rocketing, planes full, albeit at, less capacity as far as jets in the sky, at least here in the US. But it's been very interesting to see how full some of these planes are. I haven't gotten back into multi-state travel mode, seeing lots of clients, as I mostly can't stand wearing a mask, and I don't want to be sitting on some damn tube for 6 hours wearing a mask. So I just choose not to travel until all the crazies lift. But in any case, this is what's going on next 2 days. Be aware. Let's go into the markets. S&P new high all time, inching in on the 4,000 level. Do note of some interest. Why are we on the weekly chart, by the way? Let's go to daily. Start off with S&P new high. This is the 500 largest, most capitalized companies by the U.S. standards. It's called the S&P 500. NASDAQ, where most of the tech stocks and the biggest names globally reside, especially in the tech 100, which is the QQQ list here. Both of these are not near new highs, right? So there's been a little bit of what's called divergence in equity markets, something of note, okay? Again, back near the lows in terms of price. This is a 7 to 10-year bond in the U.S. Take a look at the 20-year, almost at a new low. Okay, so Remember, we had a little spike here in prices. Remember, as the price of the bond falls, the yield goes up, right? As the price of a bond, it's basically just a seesaw. It's an inverse relationship. So you want to pay closer attention to this and all of this, quite frankly, in my opinion, before you even move into the dollar, which is next. So dollar, working on a doji day, meaning it's indecision, not moving around much, forming almost a flat type of candle. Taking a look at, we're still within obviously the range that we've been in for many, many months now, back inside the range after we broke from our little trend up, so forth. Euro US dollar, still inside the range. It's almost the opposite size chart, almost like an inverse correlated chart from what you saw below. Still inside the range. Euro GBP. Actually, you know what? Let's go take a look at Euro. Now let's look at GBP first. Back inside again, the same range, up near a high. The GBPs in the relation with most other pairs have had a fairly volatile last 2 weeks from more of a predictable trend up. And then volatility is not a surprise when it comes to this currency, right? But it's been a little bit more brutal in relation to something like a GBP CAD, okay, which you guys could see some pretty wicked volatility there. So now in this particular case, I had talked, this is more of an auctioning concept from my futures trading days, is that usually when you have a, maybe not the best candle here to illustrate, but usually when you have an island reversal, you just blasts up and run stops, if you will. It's probably a ton of shorts that were holding stops up here and or waiting to get short. Went out and blasted them, had a complete reversal. Usually when this candle shows itself and then a couple print, it could be 4 or 5, it could be 2 candles print, 2 days of trading finish for each candle, right? Each of these represents 1 day. On it, a lot of times you'll have a complete reversal, meaning that you'll go back down and test the bottom of the range. So that's kind of what I was forecasting, which technically means that if you were able to spot that, you could have turned whatever pairs, EA and or your manual trading, into more of, at least for the short term, a trend down in this pair. Okay. Now I know all the software doesn't do, trend up or trend down as far as switching, and ideally in a perfect world, these softwares would have the ability to morph from some sort of balancing or tight range, auctioning from one high to another, as you can see here, bouncing within the range. And once they break out, in my opinion, the software should have been trending for this period of time, right? So I don't have to really be perfect in the trend charts that you draw, just to recognize that you had a breakout from a point with volume, by the way. See how volume started to come in as we started to break out, higher vol, which means that more than likely we're going to start to move up. Now we have a much, much bigger level up here and a much longer term time frame besides just the daily that completely stopped this as it showed up under. The tough thing about this is being able to teach a lot of newbies or newer students that in the ability to recognize this. But I figure if I just show enough chart patterns and you guys can go back and see all of the different technical analysis candlestick patterns that I've posted to my Telegram channel. If you haven't subscribed to it, you can go to the link inside the chat box here, subscribe to the Telegram channel, and you will begin to get that education. So I'm not going to spend a lot of time on this stuff today. CAD CHF. So again, looking at the daily chart, this one's been totally in a trend up. I'm actually going to draw this. Top line, these don't have to be perfect. Just gives you an idea of when it breaks. Connect a couple of the bottom wicks of these candles. Probably not the best. Try this. A little better. Doesn't have to be perfect. Just click save here. So we're in a trend up. Now, as we broke And quite frankly, right here, this is a cup with handle pattern. Okay. When these patterns show themselves and then it breaks, whatever candle breaks, you want to see it breaking on higher volume, right? We had some pretty big vol come in here that sort of held us. And I guess I imagine we'd probably want to take a look at the weekly chart too. So I think this is the big area that they're going to be gunning for at some point, which is 0.76. So just keep that in mind. Let's see what else. GBP. Let's drop back to the weekly. Take a look at a higher time frame. Probably going to be gunning ultimately for a movement up into this area. I don't know how long, I don't know when, not sure how long it spends up there. That would be but essentially we're in a trend up with this pair until further notice. Who knows, this could be the end of it, right? We could pause here for a bit. No, I don't really see any reason chart wise that we would. We're also above all the moving averages. So usually wants to sail up to a much bigger resistance point, which is right up here, right under the 3,400 area. GBP, JPY, kind of the same thing, all the way back to weeklies to get any idea. 55, 60 areas, I should say the 155 spot 60 areas would be my shot in terms of potential stop of the trend and then balance. USD, JPY, back in trend up. These lines probably should be adjusted. Be a bit steep here. Trend up for now. The daily. Save that. Yeah, let's go with that. All right. So let me just go through this quick question here because it's just not a lot of really going on today. The market's really sort of pausing. I think a lot of just it's kind of nice to have currency markets, moderately relaxed out over some of this GDP craziness, obviously, but other pairs. Question is, do you still recommend the three pairs? Because lately it seems you spend more time on British pound. The answer really no. I spend more time on what's going on, what's going the most nuts, right? That way everybody can relate to it. I don't choose because I don't run Einstein or Alexander anymore. So I don't run a 3-ring pair. We used to recommend that on what's called high volatility settings for Einstein Alexander. I haven't looked at how that software is traded in probably 4 months. And that's by design because I cannot get the communication I want from the software for the developers. We can get a much better communication of how that software is working in Gearbox, because Tyler has done an exhaustive work to remove all the problems with Einstein and Alexander, which is taking every gear or every sequence trade up and had some flexibility in that. So as he continues to iron out the Gearbox, it's going to get better and better. I always would suggest defaulting to the developer's calls. In this case, Tyler, if you want to run Gearbox, or if you want variable, listen to the developer's calls. These guys actually do I'm not sure what analysis they use, but they're really just making changes periodically to pairs. A lot of it's based, at least with Dasan, on the win rate. I know Tyler makes recommendations on what pairs. So without getting into that, because I don't really have time to get into all that analysis each week, quite frankly. So that makes these calls quicker. Plus you can get to developers calls as well. One thing to note, yeah, I see that. Okay. I'll send an email off to you on that. I got that email. Yes. Thanks, Frank. One thing to do note is that if you guys want to continue to get your teams excited and pumped up, we actually have a new compliance manual coming out at some point, I would imagine early this week, from corporate. We had a big corporate call last night. This is actually a fantastic piece, quite frankly. it is something that has been big time needed. So everybody's on a level playing field globally as far as what you cannot and can't do with disclaimers, sharing information. Gets into a lot of specifics. And I'll tell you, which is really cool. Everybody's going to be granted a lot more latitude in what they can do, as long as they stay within a fairly tight parameter group. And honestly, this is right up my alley as far as risk management, right? Making sure that, which seems like an insurmountable task, that every subscriber has gone through that, and understands, that they need to go through the AP Academy, that don't give anybody your passwords. And for God's sakes, do not go out there and live or die by the sword. And that's what I mean by, sharing performance. And a lot of the software's had very good times of performance. Some have had drawdowns, and many of the drawdowns, at least from my perspective, can be attributed to lack of education, the wrong settings, taking advice from somebody in your up or down line that thinks they're God's gift to trading, when in fact they're not. And the settings have been terrible. In many cases, they're very risky, and it winds up blowing up your Forex account, right? Not trading with capital that you can't afford to lose. So, sounds like a broken record every week, but for me, but honestly, I always put these calls in this type of frame that I have prosecuting regulators standing behind me from the SEC and FINRA, maybe not as much of an enforcement action from FINRA, but certainly the CFTC, the FTC, all these regulating and quasi-governmental bodies that exist in this country, that can come after and terrorize a corporation like us because of the fact we're not taking the steps that we, unlike many, have taken exceptionally proactive. And it is a big reason that I continue to stay on in this role. It's a boring reason, right? But ultimately, risk management extends its very, very wide net over any corporation in many different forms. And if we can get all of our subscribers educated and making sure they're sharing the love and also sharing the compliance, albeit maybe very boring, it could very well save your ass someday. So just keep that in mind. All right. So I did want to look at USD CAD real quick. Let's drop back to the daily. AUD CAD daily as well. Inside of a bigger range still, which quite frankly, I think these squeeze zone lines should be a little bit higher and a little bit lower. Looks like we're right at the bottom of the range. Problem is with something like this on the daily, it's moved around so much inside here that I think probably one of the best pieces of analysis from pretty much at this point here all the way to now, so almost coming up on a full year, should be put on a time-based profile. Something I can't show here, but give you an example of what time-based actually, you know what, I don't have that set up yet. Yeah, so stay tuned on that one. I have volume-based profiles, which is just nothing more than a bell curve to see where most time was spent, and it comes up with a center point, what's called a TPOC, which is a time center, or a VPOC, which is nothing more than just the center of where all the trading activity was, from a time base, which is really something I've been bugging these guys at TradingView to try and get, which has very, very serious merit in terms of analyzing where the center point is of this whole thing. And you can kind of figure that, with the top, somewhere just under a full par at $1 here, right, all the way down to about this 92.50-ish area. Yeah, center point's probably somewhere right around here, right? In terms of time spent, maybe a little bit closer to this area. So I would think that this should be a hard support point down around this 95.80 area, right? And we're trending down, obviously, until further notice in CAD. What else I want to show? GBP NZD still within the range. It's been in this range for quite some time. What's interesting about this currency is it has the largest range, which is actually one thing I wanted to show you guys. Let me see if I can find this. Should probably post this to my channel. Do keep in mind, guys, that for those of you trading Neo, I hope you got that note that I sent out for updating that manual time shift with the time changes. Please look that up if you haven't seen that. Yeah, here it is. I should post this. Let me just see if I can drag this over. Actually, you know what? I'm going to stop sharing that screen. Let's go over here and share. This is a pretty good piece. So this is showing the, I guess the credit goes out to offbeatforex.com. This is really just a year based, I don't think they have anything from 2020 yet, but this is just showing which it seemed to me they should have that by now because it should be updated. But it's just showing Forex volatility historically, right? GBP NZD is at the top of the list. So notice Euro GBP and Euro CHF, maybe not as much in 2015, because remember we had some crazy events going on in 15. But if you look at the other years, you may not be able to see these amalgamation of other colors. But if you're skipping the red, look at the volatility intraday, Forex volatility. So, and the caption on that is, in this post, you can find the average daily range for 28 minor and major Forex pairs from 2014 to 2020, so forth. And if you guys want to see the link to that, let me just, here we go. It's actually pretty good stuff. Let me just share the screen. Let me just pop this in because I got a question here about that. I'm gonna pop it in the Q&A window. No, let's pop it in the chat window. There we go. Hopefully that answers your question. Next question is AUD USD. Let's take a look at that as well. Must have escaped my list. Where is it? Okay, I always start off with the daily chart. Okay, so we got right under the spot 80 level here, all the way down to 76. So you've got basically 20-cent range in this. Very tight range. Notice we were trending up. Now we stopped trending up. Now we're trending sideways, or just what I call balancing through. Some people call it auctioning from one point to another, but whatever you want to call it, we're not trending essentially. So take a look at the weekly chart. And I would imagine this high up here, ultimately 81, this market's probably going to be gunning for. And this is really only based on the fact that the US dollar continues its decline, which ultimately I do think it will. So if we just drop back to the USD chart as for a reference point here, DXY, ultimately I think we're headed on the weekly chart. And this is that much more strength that we had from like just big time weakness. As you guys may recall, coming out of the financial crisis here, dollar got a big lift, and it's been stuck in this upper range for some time. We've flirted with this 89 level, and then we've bounced off, and now we're essentially $2 higher, bouncing around to almost $3 higher now. So, but ultimately, I think we're probably headed down to this 85 area would be the top of this range, because this was a big breakout for our currency. Now, they come out with stimulus 4, or continue to do things to put our country in further debt. It's just knowing nothing but devaluing the dollar. All right, so you're going to look at gold. This is the next one. I haven't looked at gold much today. Here it is. This is just gold spot, guys. Ultimately, I think this thing's headed back up higher. Problem is, I just don't know when. Now, we're on a weekly chart, okay? Because this puts it in a bigger frame of reference as far as a larger balance area we've been in. We're holding the support on the weekly. If you go to the monthly on this, I don't know if anything's going to show up. Yeah, it doesn't. But you can see that the 1730 level was a big area on the previous run up towards 2000. Remember, we ran big in gold from the early 2000s. Puts it into perspective here. This particular period of time, this whole run up right here that I'm circling, right? Actually, you know what? Let me take one. Yeah. So this whole period of time up here, we had a big run in gold. This is where a lot of people switched allocations to gold. Many of them still think that it's going to continue higher. So typically, as a store of value, which gold, unlike very few things on this planet, including crypto, has a real store of value, right? It's been a demonstrable store of value for almost 1,000+ years, right? So, this was a big run. The buy point, which seems like it'd be right here, right? But honestly, the buy point is typically the previous highs first rally back. Okay. So this is where the shorts, or just long selling out, probably a combination of the two, just took their positions, right? And we don't have any volume or anything else over there. We're just looking at just simple technical analysis here. But the point is that if you're long gold right now, this is an area you really want to hold, right in this whole area. Remember, you really don't ever want a particular price to hold. You want a zone to hold, okay? Let's think of that. All right, guys, that is it. Short and sweet today. I want to drag it out. Honestly, take your time. If you were scheduled to do a lot more time today, take your time and go through some of my previous casts. Join the developers, either live or on some of those channels recordings, and make sure you get the word out. We got a big release coming out in compliance. So other than that, everybody, I wish you an excellent week. Everybody be well, take care of each other, be kind, but be firm. And may the trades be with you.